Hello, I'm George Joseph, President and CEO of Dade County Federal Credit Union. Credit cards are great when used responsibly, but you also have to choose the right card. Today we're talking about credit cards.
What features should I look at when selecting a credit card?
The first thing we should look at when getting a credit card is the reputation of the organization issuing the card. Secondly, we should look at the interest rate because interest rate dictates payment. We should also look at late charges. Late charges can fluctuate anywhere from a dollar amount to an actual percentage of the payment or the actual balance on the card. So let's make sure that we use good due diligence when determining which card we'd like to get.
Should I use my savings to pay off my credit card?
It's a simple process. Compare the rate that you're paying on the card to the rate that you're earning on your savings account. In the current market that we're in, the savings on the actual rate on your savings account is minimal compared to the actual expense associated with that high interest rate on your credit cards. So my suggestion to you is that if you can afford to, use that savings account to pay off those high interest credit cards.
Should I transfer my store credit card debt to my credit union card?
Just as we compared before the actual interest that you're earning on your savings to the interest expense that you're paying on your credit card, do the same thing with your store credit cards and compare that rate to the rate that your credit union is charging you. And you will see that the actual difference is significant. Credit unions are capped and cannot charge a rate higher than 18%. Most store cards begin at 18%. So it goes without saying that you definitely should transfer the balances from your store card to your credit union credit card.
Should I use a home equity line of credit to pay off my credit card debt?
Let's take a look at the credit card debt and compare that to a home equity line of credit. The biggest difference is the rate. The rate on a home equity line of credit ranges somewhere in the area of 3% to maybe 5%, whereas with a credit card, it begins somewhere in the area of maybe 10 to 12% and can go as high as 20, 24%, depending on whether you use a credit union or a bank. The payments are going to be less if you use your home equity line of credit compared to a credit card. If you can go with a home equity line of credit and you feel that you'll be able to pay off this debt and not have it linger, that is probably a better option.
For more information on Dade County Federal Credit Union, visit Dcfcu.org. And remember, you can watch another Get Financially Fit segment next Thursday on 6 in the Mix.
Remember, with Dade County Federal Credit Union, you can do that!
Dade County Federal Credit Union.
Get Financially Fit is sponsored by Dade County Federal Credit Union.